Right, this will be a daily outlook for Monday, August 10th. So the market here is creating bullish PD rays, is respecting bullish PD rays. So as anticipated, right, we believe that the drawn liquidity for the month should be all-time highs, right? If not the low-hanging fruit, to be the quarterly open. Now, in this case, because of where this week will be opening, I do believe that the quarterly open should also be the objective for the weekly profile here. Right, so I would like for the market to trade up to 30,500. Um, and from there we'll see, right? Maybe we'll consolidate from there, could potentially retrace, could also potentially expand, right? All depending on at the time of week at which price would trade here. Now, in terms of time for the weekly profile, on the economic calendar front, there's core CPI on Wednesday, there's core PPI on Thursday, and on Friday there is core retail sales at 8:30 with the University of Michigan inflation expectations at 10 a.m. Monday and Tuesday there is no, uh, red folder data or market moving data, if that's how you want to call it. All right, so I do think again that this here is the objective for the week. So main premium drawn liquidity, I do believe, should be the quarterly open. Um, Past that, we'll look at all-time highs. In terms of discount, right? If we're to look at this discounted range here, well, the previous week here was what, right? You can maybe consider this a swing to Z. Personally, I've considered it a classic buy, right? Monday expands, Tuesday expands, Wednesday retraces, and Thursday, sets up the here a short-term low on the daily, right? You can see the swing low being created on the daily. On a lower time frame perspective, this looks like an intermediate term low. Okay, and we'll be looking at that on the 3-day look back perspective. And then Friday, right, expanding out of the fair value gap here. Okay, so I do believe that here this fair value gap, this fair value gap should be the main discount drawn liquidity. Okay, if you identify daily profiles that are likely looking like an open high low close, or that can be even the case for the weekly profile. Say for whatever reason the market trades above the previous weekly high, fails, and then were to revisit discounted levels, I do believe that it should be trading back inside here of this inefficiency. This inefficiency is relevant to price action because it has created a bounce price range through the suspension block located at 50% of the previous monthly range. This was a key level that we had identified coming inside of last week. And we had identified that this fair value gap, this suspension block here, also happened to cut through what was at the time a bearish order block. Right now, this is a bullish breaker. Okay, so this fair value gap cuts through both of these levels. So again, personally, I wouldn't see the reason why the market were to inverse this fair value gap. And so that is the reason why I do believe that this should be the discount drawn liquidity for a day or for the week. Okay, all depending on the profile that we'll be developing. Okay, we'll come back on the daily chart later. Now, in terms of here the 3-week look back, we can identify the phase of price delivery. 3 weeks ago, we had a classic sell week. We remember here the divergence that formed between the high of Wednesday and Tuesday. Right, the S&P 500 making a new high of week on Wednesday, while Nasdaq failed to do so. Right, and from there, this place is lower. So there was a classic sell. This classic sell was eventually followed here by a midweek reversal. Right, this is so far here the quarterly low. And again, pretty significant reversal here happening at these levels, as this was paired with FOMC, right, which we know is oftentimes tends to do this type of delivery, right? Expands one way and then either late in the afternoon, right, or I'm saying towards the closure of the day itself of FOMC, or at the open of the following day, will reverse. Right, and in this case, not only was related to FOMC, but as we had analyzed, was related to uh, a major liquidity event being um, the hedge fund blow up, Citadel buying their portfolio for pennies on the dollar, right? And since then, the market has been distributing. In fact, the previous weekly profile here, do you want to label this a classic buy, or do you want to label this a swing to Z? It doesn't really matter in my opinion. What matters is that we can identify that the market went right, it has expanded. Then if you consider this retracement to expansion or simply a phase of consolidation, right? Personally, I would consider this retracement to expansion, and that's why I'm labeling it as a classic buy, because it has to do with a fair value gap. All right, the market here came back inside of a fair value gap, filled 50% of it, and traded away from it. Okay, so because here the previous weekly profile was an expansion profile, I think that simply analyzing here the previous weekly range should be enough to gauge order flow and to identify where the potential low of the week could form. Okay, not only as a potential open low high close week, but also as a potential open high low close week, right? Now in this case, it wouldn't be enough to identify the high of week, right? For that, we would need to refer back to the 3-month look back, which we'll do so soon. Right, all we're going to find inside of this range are discount arrays, right? Maybe at the highs here we have a bearish order block, so that would probably be the only premium array located inside of this range. Okay, which we can analyze right now. We have here a large rejection block at the lows, right? For whatever reason, if the market were to come back towards those levels, or at least prove to you that it's looking to trade there, at that point in time, then only then would I put up the quadrants of this wick. But so far, this is not relevant to me. Same thing goes for this discount fair value gap here. All right, so far, this level is pretty far away from where the week has opened. So at the current moment, I'm not interested in having these quadrants up on my chart. Only if the market were to say maybe break the fair value gap at 50% or break the fair value gap at 25%, then only in that case will I be putting up, say, the quadrants here of discounted PDRAs. Okay, what I'm mostly interested in is analyzing what's located at 50% of the previous week, which you can find here a fair value gap. I simply want to look for volume imbalances related to these fair value gaps, right? So we have here a fair value gap of 50%, and then here at 25%, we have the range of another fair value gap. Now, this may be confusing, so because of that, I'll be removing for the fair value gap that is located in premium here of the previous weekly range, I'll be removing the high and the low of it, right? Simply keeping 25, 50, 75% of it. And at the high here, right, you got the only premium array located inside of the 3-week look back, which is the high of the previous week, right, which happens to be here a bearish order block on the 4-hour chart. Now, if the market were to trade past this order block, this bearish order block, then in that case, that's where we would need to refer to the 3-month look back to be able to identify right, a premium objective. Now, we said, as a rule of thumb, the low-hanging fruit objective for the week, in my opinion, should be the quarterly open, but that is not a quadrant, right? This objective doesn't allow you to gauge order flow in the moment as price is looking to trade towards premium. So before we go down to a 3-day look back chart, we can analyze here the 3-month look back to be able to identify a premium array inside of the range. Now you can see that at 75% here, the range is pretty high resistance, but there is one level that I prefer over, all the potential levels here that I've formed, which is here this bullish suspension block. And the reason for that is because if you remember from the analysis here of the month of June, which as we analyzed was a bearish swing to Z profile, this suspension block happened to cut right through 50% of the monthly range here. Right, and in fact last week the market has proved that it is being sensitive to these levels once again. Right, at the moment you can see that the market is still failing to reclaim this old bullish PD ray. Right, so very, very important this week to track these quadrants in my opinion. Okay, so this here is a premium level that will refer to, you could be putting up these levels here on the 3-week look back, but personally I would prefer including these right inside of this range, okay, which we'll look at soon, which is a 3-day look back, right? So we can start maybe by putting the suspension block up. Right, and you can see that the market has been very, very sensitive to these levels so far. Right, Tuesday creating a high of day at 50%, Wednesday creating a high of day at 25%. The consolidation from Friday's New York session happening from 75%. Okay, so if the market has been sensitive to these levels once, that means it will likely continue to do so until it either reclaims the level and expands out of it, or rejects once again at a level and then offers redistribution from its quadrants. Okay, so we can analyze here a 3-day look back, the 3-day look back range. In this case we happen to have a dealing range, right, from the 3-day look back perspective. So we'll be analyzing this range in here, right, instead of analyzing simply the previous daily range, which was a bullish swing to Z in my opinion. Now you could maybe consider this a classic buy because of the strong closure, but I think that the chop here is a bit too obvious, right? The fact that the first half of day the market expanded, and then the second half, there was the NFP expansion, but eventually the market failed to continue off it, right? It never actually created a new high of day above the NFP high, right? So for that reason I would personally label this a bullish swing to Z profile, right? So an expansion to consolidation profile. Now, having said that, we can analyze the 3-day look back range. 3-day look back, we have here a bearish New York reversal, right? So we had the formation here of an intermediate term high. Eventually, on a 2-day look back perspective, we have here a bullish New York reversal. Right, so we have an intermediate term high against an intermediate term low. In fact, this is the dealing range that we're trading in today. And the previous daily range here was a bullish swing to Z, right? So an expansion to consolidation. So order flow remains bullish here, right? As we analyze on the 4-hour and as we analyze on the daily. So we can now analyze this range. Right. So we have the high, the low, right? At the high we have here a tiny rejection block. At the low we have a much larger rejection block, okay, which should be more significant to price action. In fact, this is the range here that I'll be identifying, for the range of 25% down to the low here of the dealing range, right? I do believe that simply identifying this PD ray should be enough, and would serve as a good draw on liquidity in case the market were to reverse all the way down to range low. Now, 50% of the range, there's a couple PD rays you could choose from, right? There's an old fair value gap. There's here a large bullish order block, There's also the intermediate term low formed by the New York session here on Friday. Right, you can see here the intermediate term low that formed. So since this was the last PD ray created inside of this range, I would prefer grading the rejection block, but there's absolutely nothing wrong if you would want to analyze here the sorry, not analyze but grade the order block inside of the range. In fact, you can see that the intermediate term low here comes from the respect of 50% of this order block. And then if we're to analyze the range at 75%, right, so in preem of the range, I think that there's a pretty obvious PD ray here being the bearish breaker. Okay, so personally this I'm going to be coming inside of the day tomorrow. I want to have these PD rays graded on my chart and seeing how time moves, how price moves in time through these levels. And past that, right, then in my opinion we're looking at again a clear objective, right? A low hanging fruit objective for the day could be here. We have many relative equal highs inside of this range. Right, you can see here all the clean highs that have formed, you know, located around a clean level being 30,100. So I do think that that can be an objective for today, right, as a low hanging fruit. If not past that, right, if you're looking, because maybe if you don't have the opportunity, either because of the daily profile or because of the time of day at which you're trading, to potentially be targeting here the quarterly open, then I do believe that here there would be the high of that bearish old bullish suspension block that we analyze here on the daily chart, located at 75% of the 3-month look back. I do think that this can also be an objective for today. So I'm going to be identifying that as right, the high here of the suspension block located at 75% of the 3-month look back. All right, that's covered. So let's do here a quick recap. So on a daily chart perspective, we saw that the market comes from an expansion. We saw that last week the market has created a balanced price range through the suspension block located at 50% of the previous monthly range. Doing so has also created a bullish breaker. Right, so what's the market doing? The market is inversing bearish PD rays, is creating and respecting bullish PD rays. Right, so order flow is still very bullish here. So because of that reason, I do believe that a low-hanging fruit drawn liquidity for this week should be the quarterly open, and there could potentially be room for the market to trade back towards all-time highs. Okay, especially if this is going to be some kind of Monday or Tuesday low of week, right, where the bulk of the expansion, the bulk of the body of the weekly candle were to form as of the release of Red Folio News, right, so as of Wednesday, then, you know, I don't think that the market should have a problem getting to all-time highs if that's what the profile of week will be. Now, if the market will be delivering as an open high low close week, right, again, maybe rejecting at the previous weekly high, maybe rejecting at the high here of the suspension block, maybe rejecting at the quarterly open, then in that case, I would want to have my discount drawn liquidity would be for price to trade back here inside of the inefficiency created on the expansion of Tuesday. On a 3-week look back perspective, we analyzed the phase of price delivery. We saw that the previous week here was an expansion week, so I've decided to simply analyze the previous weekly range instead of the 3-week look back. We saw that we had here two important levels located in discount, being the rejection block that formed the previous weekly low. Eventually there was a discount fair value gap here. Now I haven't identified these levels because the market is trading so far away from them. I will don't, these to me are levels that would become relevant only if say here 50% of the inefficiency located at equilibrium of the previous weekly range were to fail, right? Were to break. In that case, I would be identifying these levels. But most importantly, again, right, we have an inefficiency at equilibrium. We have an inefficiency at 25% of the previous weekly range. And at the high, right, what formed here the previous weekly high was, well, you can find a bearish order block. Okay, so these levels here should probably offer sensitivity for the day of Monday. But in terms of a weekly profile perspective, right, I do believe that either the fair value gap at 25% or the fair value gap at 50% of the previous weekly range should be enough to create the low of week. Again, either as an open low high close week or as an open high low close week. Now, a 3-day look back perspective, in this case I've decided to analyze here the 3-day look back instead of the previous daily range, as the previous daily range here was an expansion to consolidation profile. The market simply accumulated too long for my liking. We also analyzed the phase of price delivery, and by doing so we analyzed that before here this expansion to consolidation profile, the market came from the formation of an intermediate term low and an intermediate term high. In fact, both of these profiles were New York reversals. And so because we are trading here inside of a dealing range, right, we identified what's located at 75% being a bearish breaker. We analyzed what's located at 50% here of this dealing range. And we happen to have here a large rejection block, which was the New York low. Right, in fact, this is an intermediate term low if you were to look at this maybe from a lower time frame perspective, but you can also see it from the 1 hour chart, right? You can see the clear inverse head and shoulders here forming. And at the low of the range, right, so essentially from 25 down to the low of the range, at 25% you would have the previous daily low. Right, then at the low of the range you have here a large rejection block, which is the rejection block that forms the intermediate term low of Thursday. Now in terms of premium drawn liquidity, right, past the bearish breaker, right, past here the previous weekly high, we said that's some objectives for the day can be 30,100, okay, which was the relative equal highs the relative equal highs here that can be found on the daily chart. And then past that, right, there would be the high of the suspension block that we identified here, looking at the range of a 3-month look back, right? We saw that the market has been very sensitive to these levels so far. Currently it has failed to reclaim this PD rate, right? I do think that it would do so once 50% of it is closed above. Right, but since the market has been sensitive to these levels so far, I do believe that it will be the case again until the market leaves this range. And so because of that, I do believe that past the relative equal highs on the day, the market should likely be trading for 30,200 here in case of say an expansion profile. All right, I think that's all covered. Good luck and good trading.